Hey everyone, welcome back to Jesse's Lane. Getting back here with another market video. Got a lot of good information coming at you. It's been a long time since we've done a market video, and I kind of want to just talk about when we could potentially see stocks at all-time highs again. Obviously, it's been crazy year. We've seen obviously all the way back into a bear market actually, from a major bull market that we had like for basically 2 straight years. And then all of a sudden, obviously, inflation got a little bit out of control, and now the Federal Reserve is here to try to contain it, and we'll see how they do. So far, not too bad. It is. I mean, we're still way, 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 way high. So we will see exactly kind of where they go from here. But let's just kind of get back to why we saw the market tumble today, as we saw it nearly down 700 points, the Dow, that is. Um, so let's just kind of get into why the market dropped today. Um, so unfortunately, let's just talk about the Federal Reserve first, why they're such a big key important role in all of this. Basically, the Federal Reserve can kind of slow demand just by raising interest rates as much as they want. So if they see high demand, all they have to do is just raise interest rates. So and obviously that makes sense because the higher it costs to buy something right now, especially with inflation so high, the less likely you're going to be borrowing money now to buy things in the economy. So basically, that's just how that works. Now let's get into why we saw the Dow tumble. Just everything across the board just tumbled. S&P, Nasdaq, everything basically just took a huge tumble today. So one of the Federal Reserve presidents from St. Louis, his name's James Bullard. He came on an interview today, and he basically said that he supports another 3/4 rate hike again. So it'd be a third consecutive 3/4% rate hike. And right now, the so on July 27th, Jerome Powell, during the last meeting, he literally just said that they were probably going to be slowing the rate hikes. That's basically what he said. Um, so as we saw this is kind of the meeting that I was talking about, just right here in July 26th, 27th, whenever they had those meetings. But on the 27th, he spoke about kind of what they had a meeting about. So, and basically, he was saying that yeah, we're probably going to have to slow, um, the rate of rate hikes that we're doing right now. So basically, he was supporting a 50 basis point hike in the month of September, which would be right in here, that September 20th to September 21st. That's kind of the one that he was talking about. And then obviously, who knows from there. I kind of want to just take a look of another important thing. Let's go here. Let me make myself smaller. Okay, so this is another kind of important chart that I've been paying attention to. This goes all the way back 12 months. So, well, really 13 here because we have July, and obviously it's August right now. So anyway, but as we saw, this is kind of CPI for all items here. This blue line right here is what we're looking at. So from July and August, September, we kind of just saw that straight flat line right in there between 5 and 5.5, somewhere in between there for 3 straight months, right? And obviously, we just saw huge inflation here from June. Well, shoot, even April, May, June. Those 3 months, I remember gas prices, obviously just skyrocketing. Um, and basically, when this war started taking place, which was at the end of February, we kind of saw a nice little bump, um, came back down, and now we're kind of going in the wrong direction again, besides the last one, obviously. So let's kind of get back into this again. Sorry, kind of get a little bit off. But obviously, as you can see, September to October, that was a huge spike right in there. This is kind of whenever we saw the Federal Reserve immediately U-turn and basically started not printing near as much money. The taper tantrum is what a lot of people call it. But anyway, obviously it was much needed as we saw, near 7% inflation by the time they even stopped printing as much money, which is just insane. Anyway, I just also want to make a note that we were literally printing money all the way up here, which was 8.5%, which is insane. So this war, and then obviously we saw a quarter point basis hike on that one. The next meeting we did a 50, and now obviously we've had two straight with 75. So this is getting pretty crazy. We'll see exactly what the Federal Reserve does. But the reason why this is so important is because the September, October, November, we saw a huge spike. So basically, I know this kind of seems weird, but to get back to 2%, we actually really need these lines to be up here, because obviously the big jump from year to year is what the Federal Reserve is going to be looking at. We don't really care about what was in the past, which seems crazy because obviously that was an insane moment when we were like, "Oh my goodness, we're printing money and we're at 7% inflation." I remember just thinking, "Come on, guys, you just need to rip the Band-Aid off and just hit us." But they obviously didn't. They were wanting to uh, basically communicate how they were going to do this up until we were at neutral, which is exactly where we are at now, which is what they claim to be neutral, would be right around this 2.5% here on this one. So basically where we were in 2019. But that's kind of what they're saying right now. Um, but anyway, I also kind of wanted to make a note. We also have to look at these 10-year treasury lines because this really does have a huge effect on housing. As we see interest rates rise, as the 10-year treasury climbs, so like if it goes from 2.5 to 3%, we're going to see interest rates for a 30-year mortgage go up, obviously, as well, because typically they follow the 10-year treasury. It's very, very close connected. Those two are very, very close connected. So let's go ahead and get into what I kind of believe the Federal Reserve is going to end up doing. The reason why I believe we saw this, let's see if I can find this. Yeah, here we go. So this is just the past 3 months. So we obviously saw it all the way back here, and this would be June 14th is whenever we saw nearly that 3.5%. So basically, whenever we heard Jerome Powell talk, we were right around 2.8 roughly. So, and then we saw a dovish tone coming through the Federal Reserve. My belief is the reason why James Bullard came out today and said, we're not even close to done. I support a 3/4 point basis hike, which he may, because he's one of the most hawkish Federal Reserve chairman people that we have on there. So that actually easily could be. But I think what we're going to kind of see is we're seeing a lot of tough talk right now still. They want this to be a little bit higher. I think they like this more in the 3% range. And I think once we kind of see that go a little bit higher than 30-year, or than 3% for the 10-year, we could easily see them start to talk dovish again, which is just crazy because all it does is just mess with markets, the bond market, and it's just hard for them to know and understand what they need to do. So, in my opinion, I believe that they're just going to end up doing a 50 point basis hike for the month of September because I believe that we're going to start seeing a little bit lighter inflation numbers. I could see us being even closer to 8, even below 8% in the next CPI reading. So we will see exactly what we get. And I know a lot of people were talking about jobs as well. I don't really think that the jobs market is going to be a key indicator for the Federal Reserve. And the reason why I say that is because the jobs market really does lag what the Federal Reserve does. Typically, what the Federal Reserve even says is it takes up to 6 months a lot of times for the jobs market to even respond to what the Fed has even done, which makes sense, right? Because a lot of people they have a leeway. So when you order something, they may have a 3 to 4 month wait, and that's pretty typical. So whenever you order these things, and then all of a sudden interest rates, well, then you're going to start seeing demand lose, and then you're going to start seeing unemployment numbers bump. That's another thing that we need to look for in September. The month September, we need to start looking at weekly unemployment. Um, People who just file for unemployment, basically, and that comes out every Thursday. I have been keeping an eye on it. It has been ticking up here very, very slowly. Um, so we will see if that has any effect. Um, it's just, again, it's just another lagging effect. Um, Obviously, what most people consider we're in a recession right now. A lot of economists say two consecutive quarters of negative growth would be considered a recession. So that's just my belief, though, and I agree with the stock market as well. I believe the second half of 2023, we're going to actually see interest rates reduce, whether that goes down 1/4%, whatever they end up doing. We'll see how much demand slows. It could even be earlier. We'll see. Um, Me personally, I hope that the Federal Reserve does do a 3/4%, because in the long run, I do believe that it's gonna, um, it will end up. We won't have to go quite as high. So if you just do another 3/4%, obviously it would maybe even shock markets even a little bit more, and we could start seeing things really, really pull back. But we will see. Um, Obviously, there's a lot of uncertainty in the market, and stock market is not like uncertainty. They like to see forward thinking. We have a lot of things coming up. We have an election coming up for midterms. That's going to make another impact as well. So we will all have to see how this plays out. So I would keep out some buying opportunities. I believe that the market will continue to kind of trend down. I don't believe it's going to tank by all means, but I do believe we're going to start seeing the market trend down, and I think it's going to be a good buying opportunity. Really, as soon as September, that end of September, early October is whenever I'll be looking to buy. So I would just stockpile cash for the time being. Anyway, I want you guys to check out some more videos of mine. I've got a lot of good videos coming out as well. So just continue to stay tuned, and I'll bring you another video very soon. Thanks for watching.